Well, Nvidia delivered big numbers, but Wall Street basically said, meh. So what happened yesterday? Hey everyone, it's Friday morning, February 27th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. So yesterday was a bit of a roller coaster. Stocks actually recovered from deeper losses during the session, but overall, it was still a down day for most of the market. The tech-heavy Nasdaq Composite dropped about 1.2%. The Standard & Poor's 500 fell roughly 0.6%. Meanwhile, the Dow Jones Industrial Average managed to inch slightly higher, finishing just above the flat line after stronger gains the day before. Now let's talk about Nvidia. Even though the company crushed expectations on revenue and profit and also gave guidance above estimates, the stock still fell more than 5%. Why? Well, investors weren't exactly blown away. There wasn't much detail about what's really driving the outlook, especially when it comes to potential revenue from China. So experts started asking questions about competition and whether the artificial intelligence boom can really keep this pace. And that whole AI scare trade, yeah, it's still very much alive. Investors are getting nervous about whether we're looking at an artificial intelligence bubble, especially with the pressure it's putting on traditional software companies. Salesforce, by the way, actually turned higher after its chief executive tried to calm nerves, even though its revenue forecast came in below expectations. In other earnings news, Stellantis posted a massive full-year loss of $26 billion after a big electric vehicle-related charge. Meanwhile, Warner Bros. Discovery, Dell, and CoreWeave were also in focus. On the macro side, initial jobless claims ticked up slightly yesterday, pointing to a somewhat stagnant economy. Now investors are waiting for today's wholesale inflation data to get a better sense of whether an interest rate cut could still be on the table. So overall, strong earnings weren't enough to keep tech flying, artificial intelligence doubts are creeping in, and the market is still looking for clarity. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.